British mining firm Anglo American has rejected a $39 billion takeover proposal from Australian firm BHP Group. Now, according to its management, the proposal is opportunistic and fails to value Anglo American's prospects. Under the proposed all-share deal, Anglo will first spin off controlling stakes in South African platinum and iron ore companies to its shareholders before being acquired by BHP. Now, BHP said the total per share value of the non-binding proposal was about $31.33. Well, analysts say that Anglo's rejection was widely expected, as BHP's proposal was seen as well below the sort of price that would bring the 107-year-old miner to the table. BHP will now have to improve its offer if it wants to start talks. South African mining firm Impala Platinum says it could cut 3,900 jobs as it restructures its South African operations. Now, the miner joins others in the country who are shelving expansion projects, closing some operations, and letting go of thousands of workers in a bid to preserve cash as some metal prices plunge. Now, platinum is down 7% so far this year, while palladium is 10% lower since the beginning of the year. Management says this has significantly undermined its financial position. Miners have also been impacted by a myriad of local challenges, including power cuts and a crisis at the state port and freight rail company. Oil and gas giant Exxon reported first quarter earnings that missed expectations, sending its stock down as much as 3.5% on the day. Now, net income fell 28% compared to the same period a year ago, as the industry came under pressure from eroding refining margins and collapsing natural gas prices. Revenue was $83 billion versus the $78 billion expected, while earnings per share was around $2 versus analysts' expectations of $2.02 per share. Now, Exxon came under pressure as natural gas prices plunged 37% this year, and refining margins are lower than they were a year ago. Oil and gas production profits also fell 12% to $5.67 billion. And tech giant Microsoft says cloud AI demand is now exceeding supply. According to the firm, demand for consumption-based artificial intelligence services in the cloud is now outstripping supply. As a result, the firm has had to increase spending at a rate not seen since at least 2016. Even then, it still might not be enough. In its earnings report this Thursday, Microsoft said capital expenditures jumped 79% from a year earlier to $14 billion. The company is spending much faster than its increasing revenues. We saw sales climbing just 17% in the period. And that's a look at our corporate headlines.